We would, yes. The trade war has been put on the back burner after the truce that was signed a few weeks ago. It's less front of and center for investors, but we have to recognize that it's still there, and it probably will remain with us for the foreseeable future. So any tweet, any remark, whether it's positive or negative, will definitely have some impact on the market. And that's one of the reasons we think that at this stage, unless you see real progress being made, the market is probably going to be range bound, at least in the US.
And that's interesting because we've had double-digit gains marked up on US indices, major US indices, year to date here. And the data has been relatively strong from the United States, particularly that consumer spending number. Why can the market not melt up on that and the prospect that Powell will give further rate cuts?
The problem is the market seems to be discounting right now a sort of Goldilocks scenario into perpetuity, where you're going to have a central bank that will be accommodative, cutting rates. At the same time, you're going to have data that will be good, at least. And so if the pendulum swing one way or the other, if the growth suddenly becomes really good, that might be positive for sentiment around where the next recession is going to come, etc. But that should normally push the Fed to have a bit more patience, like they used to have a few months ago. And at the same time, if really the data goes bad, yes, the Fed might step up. But would that be the sign that a recession is on the cards sooner than people expect? And right now we're in this sweet spot where everything seems to be perfectly aligned. It typically doesn't stay there for long. So the next batch of data or the next comment from the President of the United States, etc., will likely make that pendulum go one way or the other. So range bound is probably the easiest way to think about how the market could behave for now.
Just delving into a trade-sensitive part of the markets, and that's industrials. And I've got a chart for industrials this year, and you can see that it has not been hampered by the uncertainty around a trade war, possibly because we're still talking about the potential for more stimulus from central banks. And it does feel across the markets there is a great big feeling of buy on the rumour, sell on the fact, and whether that fact could be central bank action when it finally happens, or whether it is a trade resolution. Point is, how much more upside is there as we bump up around in the States, at least, some of the peak levels that we've had on markets?
And that's not just for industrials, but I think in general for the market, the upside will come from mostly trade resolution. That is, I think, the scenario where you could see the most upside. It's difficult to argue from upside coming from central banks alone because they're pretty dovish already. And it's also difficult to argue from upside coming from a strong earnings pickup. Because earnings are what they are, they're mixed at best, and the macroeconomic environment doesn't justify for an earnings acceleration. So it has to come, I think, from trade war.
Just quickly, I want to get into some of the central bank commentary, because I was reading a report with Data Trek Research yesterday saying that you've got very explicit forward guidance now from the Fed, still different to what you're seeing from some of the other central banks, where they're sort of indicating there might be more coming and keeping a little bit of mystique around their communication. Could that change? Could you see other central banks be as explicit as the Fed?
That's definitely the direction we're going through. If we think about the introduction of forward guidance as the first step, and now the forward guidance is extremely detailed, is almost not a guidance, but almost a commitment now. So I think the market, because of all the easing we've seen in the past, need to have more and more detail in that guidance, and that's something that we clearly could see. We have to see with the ECB and the new leadership how they intend to manage that. But clearly forward guidance is even more important than decisions. Nobody really think about the decisions because they're communicated so far in advance that all we care about is what's next, and what's next 6 months down the line.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.